Hello, this is Brian Resney, President of Resney Wealth Management, bringing an important update about the economy and the investment markets. We are getting close to the end of the first half of the year. Generally speaking, a lot of the markets have done quite well inside the U.S., mainly large cap exposure. Small and mid continue to lag quite a bit. Outside of the U.S., which we have no current investments outside the U.S., have really done poorly, generally speaking, especially on the emerging markets. Some of the areas in Europe have done decent, but again, I go back to one of the best places to be invested so far this year has been the U.S. marketplace, which we are in. We made some portfolio adjustments in our growth portfolios and aggressive growth portfolios about a week ago, trimming some overexposed growth in technology that is starting to get a little pricey, and added a little bit more into the more value type camp. Again, we make these changes to take some risk off that is overheated and buy areas that really have lagged for a while. In fact, we added a new stock, PayPal, as of recent. And the reason we have, it became one of those bargain basement sell-off stocks that was giving us a sell trigger to buy. So again, balance in a portfolio. I realize growth has done extremely well this year. We've been in a lot of growth this year, but we're going to be trimming some of that exposure because it's getting kind of frothy and adding to areas that have lagged. So we kind of, when that starts to recoup, we feel the second half of the year, we'll continue, hopefully, the positive performance. Of course, the Federal Reserve is talking about interest rates. They're talking about a pause, wait and see. Maybe there's an increase. I don't think the Fed's going to do anything in the next meeting. I think ultimately they're going to be done with interest rates. Inflation is falling off a cliff in a lot of areas, as I've talked about numerous times this year, which is a positive. The other thing, the economy is slowing in certain areas, and we've had these rolling recessions in different parts of the economy. I'm not seeing any major recession this year as an overall that Wall Street calls for last year and this year, by the way. But I do see more of a softer landing if things stay on this path. So that's a net positive. There's been a lot of skepticism within the marketplace, whether it's bonds, equities, or the economies around the world. And again, this is the negativity for the most part come from these Wall Street firms, banks, and insurance companies, and they're usually wrong all the time. So again, those are not things that we track. We go and buy independent research. We do a lot of research. We'll make adjustments when necessary, accepting short-term volatility in order to prosper for you, the client, on the long term. As always, if you have any questions about your portfolio, any concerns, please call the office. If you have any friends or family who are not happy with their current advisor or firm, we always appreciate your business and your referrals. Have a safe and profitable day.